Hi, thank you for joining this mini webinar. It's going to be really crisp and short to the point webinar. Before we get into the presentation, let me just take a couple of minutes to introduce myself. I am CA nrajca, Chartered Accountant by qualification, a teacher, trainer by passion. I started my career as a banker, credit analyst with State Bank of India, worked for a period of 4 years. In very short period, I had the opportunity of becoming team leader, credit processing cell. So worked on 250 plus projects. It's 5,000 crore plus size. Then came out and started my CA practice, had my practice for a period of 7.5 years. Alongside had this teaching training. Thanks to technology, today through online, I teach 2 lakh plus students all over the world, basically on banking, credit and financial analysis, and majority of them are working banking executives. I'm really glad that my courses are helping them, and I'm sure this course will be relevant and useful for you as well. Let's get into the webinar. Let's talk about a review of warning signals, irregularities and compliances. Banking system will have substantial audits. Okay, it's not confined to only statutory audit at the end of the year. They'll have audits like internal audit, or we can say credit audit. Then there will be risk-based audit. There will also be income leakage audit. Then there will be statutory audit of that bank's branch. There will be stock and receivables audit report on customers. There will be statutory audit of customers, so that got to be reviewed, and even Reserve Bank of India will be coming and doing audit. Okay, so in loan proposals, all this with reference to the customer should be addressed. If you take internal audit report or say credit audit report, they'll be talking about various irregularities that were noticed in pre-sanction, then irregularities noticed in post-sanction. All those irregularities have to be addressed. If any of the irregularities brought out or recorded in this internal audit report is still unaddressed, still it is not resolved, that should be brought out in the proposal. Why it is not resolved? What is the reason? How much time is expected for solving that? All those should be brought out in the proposal, and whether any approval is required for any of the issues recorded in the internal audit report, because sometimes post facto approvals will be required. Whether any such approvals are required, all those should be brought out. Similarly, in risk audit report, various risk or deficiencies would have been identified, and if it is remaining unresolved, that should also be brought out in the proposal, and what is the time period required for addressing it fully, that should come out. Then comes income leakage audit report. Banks will have its own internal auditors or outsourced external auditors coming and doing income leakage audit. They'll be comparing what should be the income as per sanction letter. They'll be comparing what should have been the income for the bank as per sanction terms and conditions, and that will be compared with actuals. Let's say sanction terms and conditions says interest rate should be 10%, and if actual is 9.5%, then there is a leakage of 0.5% on the loan account. Let's say sanction terms and conditions says LC charges are 1%, and what was charged actually is 0.8%, then again there is a income leakage of 0.2%. Okay, so all this should be addressed. All this income leakage, whatever recorded in the report, should be recovered. Whether those income leakage were recovered or not, that should be brought out in the proposal. Okay, then statutory audit report of bank's branch. See, statutory auditor of the bank's branch could have identified some discrepancy, on customers' accounts. It may be on the pre-sanction process or post-sanction process. But if any such discrepancies were recorded by the statutory auditor, and if those discrepancies are yet to be resolved, that should be brought out in the proposal, and the reasons why they are not yet resolved and when they are expected to be resolved. Okay, that should be given in the proposal. Then comes stocks and receivable audit report. Depending upon the loan size, okay, because it again varies from bank to bank. Let's say the loan size is greater than 10 crore. There will be a compulsory stock audit, or let's say stock and receivables audit of the borrower by a chartered accountant firm, and this will be based on sanction terms and conditions. This will be based on sanction terms and conditions. So when loan amount is greater than like this, when there are stocks and receivables audit report, and if the report is clean, when there are no issues, then absolutely we need not worry. But if the stocks and receivables audit report says there are issues in drawing power computation, okay, if it says there are irregularities, or if it says that there is a clean portion, in CC outstanding, it is a matter of concern. So what actions are taken? Whether those clean portions are carved out, whether they are recovered from the customer immediately, what steps are taken for that, all those should be brought out in the proposal. So stocks and receivables audit report is a serious report. If it comes with any negative observation, that got to be addressed at the earliest, and that should be brought out in the loan proposal. Then qualifications of statutory auditors of borrower, that is chartered accountant firm, statutory auditor of borrower, if he has any negative observations on the account which he had audited, we call it as qualifications. And if those qualifications are not yet addressed by the borrower, that should be brought out in the proposal. Let's say for example, there is a company called A Limited. Statutory auditor of A Limited, let's say X and Co. In his audit report, he had made certain qualifications with regard to non-compliance of accounting standards, or with regard to not following the legal provisions of Companies Act. Then those issues should be addressed by the directors in their directors report, and it should be convincing to the bank. If those issues are not yet addressed, that should be brought out in the proposal. What is the present status? What steps are being taken by the bank to address those issues? Okay, so that's very important. Then finally, internal audit report. Banks will also be audited by Reserve Bank of India at certain intervals. At that point, they'll be reviewing loan customers or loan accounts, and they'll also be making their or recording their observations on pre-sanction and post-sanction. So the discrepancies identified by Reserve Bank of India inspectors, auditors, if they are still pending unresolved, that should also be brought out in the loan proposal. Thank you so much. We have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2000 rupees. But for you, I'm going to give you a special offer. Here we go. Banking credit courses bundle. This includes course number 1, banking credit analysis process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2, That is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like auto credit facilities, letter of credit and all. So far I have introduced 7 courses of 1999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, collateral securities, a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over, some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complimentary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course.